All right, welcome back for another week of torture. Well, kind of. We're gonna do something a little different today, but kind of the same. Sitting through this chop on Q and SPY has just been murder for a lot of people. It's been a challenging week last week trying to float around and even scalping the volatility last week, well, the lack thereof, was challenging, even for me. Even on my days off when I wasn't streaming or teaching, I tend to trade for myself. I kind of sat out a lot because I just didn't see any quality setups of really any breaking moves. Today we got a few. Yesterday we got a few more. But as far as general scalpability, this market's been kind of but it's coiling up for something, and that's what we're looking to talk about is what are we expecting later in the week? Well, we do have some data coming out this week, but what's on the agenda for over there at Total Capital? I mean, are you guys looking
Yeah,
to?
we got CPI, PPI, all that stuff coming out. You know, interesting. You're seeing interest rates start to creep up again. You know, people thinking after that last jobs number that the Fed is behind the curve again, and you know doesn't know what they're talking about, which is probably accurate.
Par for the course.
So yeah, so you know you've got some uncertainty. You know, weird rally today where it's just I mean, just NASDAQ and SPY. You know, you've got the Dow and the small caps flat, and my portfolio not doing all that well either for some reason.
Yeah, I went and sold a put at like right at the bottom of TNA yesterday, and that's pretty much all I really did. I meant to sell a call on the open, just didn't fill, so I didn't let it go. But other than that, I've just been waiting for this market to eventually break out of this chop. I'm a little bit more leaning on the bullish side of things than bear. But then with this data, I mean, that can change at the drop of a hat. So like you kind of gotta.
Yeah, and I do lead on the bullish side. I mean, the Fed is still in a cutting cycle. If you believe the jobs number, which I don't, but if you do, you know, the economy's still strong. You know, I continue to think it isn't, but everyone tells me and every number I see says it is. So until I have proof, I'm not going to pound the table for that.
Yeah, I mean, in chart probabilities, I always talk about like follow through for continuing to be bullish is a little higher than you know, a bearish pullback in this case. And the market's been consolidating in this range. I got like all the liquidity zone. My charts look nasty sometimes, but bear with me. We have, you know, some support here. We got some upper mid-range resistance here. We broke through that today. We went A to B on that one, and then we've got this one up here that's kind of creeping up on us. And this is a scenario where we'll either break out of one side or the other, and probability's kind of the 60-40 rule, I like to call it. It's got a pretty good chance of remaining bullish overall. That's what I see in the market anyway. Yesterday I kind of posted I belong to this Facebook group. They basically just focus on selling cash secured puts, but I also sell calls, but I'll call it out in there. I put out in there that I sold a 39 strike for next Friday expiration on this thing to open, and this dude's like, you know, what if it drops to 35? I'm like, well, then I'll just sell covered calls and recover. It was like, well, won't you be underwater? I'm like, well, no. Since March, my cost basis overall, I've been averaging about 18% a month when I've traded this more actively, but I pretty much skipped like probably May and half of June, so there's some time in there where I wasn't doing anything. But with TNA, I've got my cost basis overall down to like $15.10 a share. So I could care less if it goes to 35. I'll just sell some covered calls. I'll still be well within my overall cost basis, even if I get a sign on this put at that strike, less the premium I got. I got $1.04 premium on a next week expiration. You know, what, 3-4 strikes out of the money? I'm not going to complain about that. That's huge. So when it comes down to context of balancing your portfolio in that means of selling premium, it makes sense to kind of sell more premium in times of consolidation and chop like this, where you've got expected edges of the range, I like to call it, and just sell the edges. Same goes for like running debit spreads or credit spreads. You kind of either buy or sell the edges, and when you get your expected range move, you make profit. So as long as the price is moving, we do well. But when it's challenging and it's in a tight range and it's very choppy, like last week was kind of garbage, you know, you end up kind of sitting on your hands. But that's for day traders. For long term, that's the best time to sell premium because this is time consuming and theta pays the bills when you're a member of the theta gang, so to speak. So selling premium makes sense, and the range was just beautiful. So come back down to center maybe. I could see that happening between today and Thursday, just before all the data comes out. And we got kind of a range in the middle here. So QQQ, I'd say we'll fall around the 480 to 485 range ish before we decide to make a breakout, but still tentatively biased to the bull side, unless something dramatic comes out. So we'll see. Got a few other things we're watching, and I picked off a couple on the breakout scanner that I noticed were setting up pretty well. One's Roku. Let me get my full grid out.
I haven't looked at that in forever.
Me either, man. We used to nickname it.
Didn't even know they were still in business.
Right.
Oh
wow. We for the longest time had a nickname for it. We called it Broku, and it was funny because when I was becoming a moderator, so to speak, starting to show some live streams, I was mostly in penny stocks at the time, back when this was going on, and then I would pop over to the large cap side because we would have two different streams going, and everybody seemed to be bullish on Roku in 2021 around this time. And I looked left, I'm like, dude, that's the most massive. And I would probably have looked at it on a weekly chart, not a monthly chart. Sorry, let me zoom way out and go back. That is the most textbook double top you've ever seen in your life. It's just a giant M. And,
Yep.
Around the end of 2021 or last quarter, they were looking to long this thing, and they got their little long here. They did okay, and I'm just like, no, man, I'm going to go bearish as hell on this thing long term. I'm doing leaps and everything I can do to go bearish on this thing because market structure. I mean, that's textbook market structure with an M top to boot. All that capitalization. I went hand over fist time and time again going bearish on this thing and just caught that whole damn trend back down to support. I walked away from it by, about mid-2022. I was done with all that. I haven't looked at it since, but I left all my old dope on there from when I was trading it. All my pivot lines that I trade to and from, there's some trend lines I traded. All that stuff is still there. But then we've done the market structure thing. Consolidated, got the first consolidation, we got a squeeze in here, second consolidation. Now we're in a point where if second consolidation starts breaking resistance, we could start to see a trend, and that's where we make the long-term reversion trade. So, we have a chance of shooting back to that 233-ish midterm or mid-range in the middle of high to low here. That's a long time though. But I will say this, the premium yield on selling options on this thing is favorable. You can shoot for an average on monthlies if you were naturally trading, selling liquidity on it or selling premium on it, around 8%, which is pretty nice. If you weigh that out, and that's if you're comparing outlay dollars to percentage of return on premium. So like if you sold a cash covered put or covered call on it, it would be a percentage of your total outlay in a trade. So it's beginning to be reasonable in this respect where there's good premium on it. And also it's got that slightly bullish trend. So us wheel traders, we look for this type of thing. And market structure has been like a go-to for that. So all of our long-term wheel trade strategy tends to take a focus on market structure. And this is exactly what we look for the long-term stuff. So I like it in the short term too. It's set up for a pretty decent little measured move trade here. We got consolidation breaking. It's tested support today, and we're looking for probably a first target of about $80.80. And if it continues to push up, we've got two pivots, 84.50 and 86. And 86 fits a 1-for-1 perfectly. And you can draw it either way. You can go for the short-term stuff, or you can go for the mid-term stuff. I've got this as our whole primary. It sets up the same targets basically. So we're also looking left here on the daily chart. We get this massive gap here, and that's where resistance is right now. So this liquidity zone is going to be key, and I'd rather mark that out. It's also a reversion area, so if this gets broken, we have a pretty good chance of remaining bullish above that. So that's where I'm looking. If we break this range, we're likely to follow through, and if we close this gap, boy, we can get up to the 90s. That's possible. But this will take a while. It's going to, this is a daily chart. Short-term stuff, beautiful cup and handle set up for continuation. We got the nice roundy. Expect to handle in this range, and eventually, probably next week or so, we might see this thing trend above. This is our key area to watch resistance, and long-term, if it follows through, I'm bullish on it. I like this one. The only other thing I had on my list that came up on the breakout was another weird one. Oracle. That thing has potential to make some pretty nice moves very suddenly. I know back in the day we were just looking at repeat. We got the scalping pattern here. If you go out to the monthly, you had your market structure here. That was way back in 2000. That did its thing. You got the first consolidation, first squeeze, second consolidation, finally trended, tested, and here we are now. Massive moves later, right? We've got outside of a 2-for-1 on this whole range, but if you take this whole thing as a primary move, you got a much higher target if this breaks out, and that flag is beautiful right here. Yeah, let me go to the 2-hour. Just starting to break today. If we break resistance at about 174-ish, previous high range, and again, I'll take and just kind of stripe that as a liquidity zone. If we breach that, we got a pretty good shot of remaining bullish and finishing the move. And so far, this thing's been performing pretty well this year. I mean, there's some big moves in this thing.
Just remember on Oracle, so they came out on their earnings, and that's the gap. And they were extremely bullish on what they could do in AI. And so, that's really all you need.
Pretty much.
Yeah.
It's right.
I like this name. I don't own it right now. Again, I don't like buying stuff that gaps up like this. I want to wait for a dip, but
you might not get one.
Definitely something I may want to buy at some point.
Another thing I kind of pay attention to, I always look left and on a daily chart. We have seen several flags fail on this one. It's kind of a habit. You see one here, it broke down and failed. It did give a fake breakout and then failed. Same here, fake breakout, failed. So it does have that possibility, and that's why I love to mark these zones very clearly, because if it rejects that cleanly, we don't have to take a long trade. We can wait for it to give a pullback, and you may get one. You'll either get half of this block or the whole block right back to the top of that gap. But if it pushes through here, you can also catch be a trend trader, just trade the trend till it ends and then get your pullback. So it's got that setup where it could go either way, and this is going to be the make it or break it sign right here. So if we continue bullish, we got all the bull targets mapped out. If it rejects, we got bear targets too. So either way, keep an eye on this thing. It's going to give us a good trade soon, but so far that flag looks gorgeous. Just wait and see what happens with the qualifier. It's got to break that resistance. So that's it for me for bullish trades this week that I'm looking at. And then, of course, we kind of know where the market stands with this chop that's been just horrendous. There's a few other equities we'll reflect back on from stuff we called out last week that followed through beautifully, which I'll also point out, and we'll try not to injure our elbows, patting ourselves on the back again. But you had a couple on your list that were standing out to you.
Yeah. So, Lilly is one. I mean, it's a long-term holding for me. I love the weight loss drug theme. I bought more yesterday on an undercut and rally at the 50-day. So, it's had some weakness recently. It looks to be recovering, doing real well today.
So I'm going to answer a question here. So let me get back in that ticker real quick. Sorry, I got distracted. That was LLY.
Okay.
There we are.
LLY.
So I kind of had this thing as we were looking at this not last week, but the week before. and I kept it in the loop because we pulled it into last week's look back. Now it's kind of set up to where it's given the pullback. It kind of bounced off that support level, and yeah, we're looking bullish here as long as we can break. I usually mark these in white back above that mean here on that previous wedge. We got a good shot at hitting up to this liquidity zone again. So it's got an interesting look. And you went long on it. You bought more yesterday?
I bought more yesterday, yeah, when it undercut and rallied above the 50-day. So
Nice
far
move.
today, keep going.
I think if we break this angular here, and we already broke it with the morning spike here, we should have good momentum above that 913. And if things remain bullish, we'll eat these two bars, hit resistance here again, and then we'll see if it consolidates and continues on up to this liquidity zone. I like the setup. I mean, it's I should have bought it yesterday myself, but I wasn't paying attention to it, and sure enough, it kind of
You've
followed
asked
through.
me.
I know, right? I gotta hit you up more often. We could just hang out. I mean, we're live streaming every morning in Bullishbrs. You're welcome to hang out. You can throw us a
I wish I had time.
right.
Once I hire my new trader, then I'll hang out.
There you go. And there's quite a pool of traders out there, so we're all we're always looking for stuff like that. So if you guys know anybody out there that can be a trader, well, there you go. He's hiring.
Not a discretionary trader, but someone
Yeah,
who can think.
someone who can actually think and put price action to work. Real quick, I got distracted by this a second ago, but not a distraction. Yes, we do have some courses and some material on the wheel trade explaining the strategy pretty well. If you do a Google search on wheel strategies and Bullishbrs and add Bullishbrs to it in Google, you'll come across an article I wrote a while back that explains the strategy quite well. And then every day we're always talking about it a little bit, and I'm always posting updates to my long-standing TNA wheel trade. Every time I make a move on it, I post it in there and then teach a little bit about it too. So, yeah, we're kind of always talking about the wheel trade strategy because it's a income strategy that pretty much every investor should know, whether they're passive or active. That you should know how to sell options, and it is if you're a dividend investor or a dividend yield chaser, that compounds the hell out of a dividend like you wouldn't believe when you learn to wheel trade. You kind of tend to forget about the dividend. In fact, I forgot to deduct the dividend payment from the last one on TNA from my cost basis, so it's actually 1507 per share, something like that. So, long story short, we do talk about it quite often, and that's kind of where we're at. What's our view on financials as JPM and Goldman Sachs? That's another good question. We'll get to that in a moment, but we got two more to look at from Matthew's list, and we can get to that.
Yeah. So the other things I did. So I mean, I missed that China move. I had stopped looking at China a while back, but if China's going all in on stimulus, that stuff's going to run. So I've been waiting for a pullback, and we got it today. So I went into Baba and Baidu today.
Yeah, we did. Yeah, I was talking to some friends last night. China futures started running, and then we're like, "Oh, this is gonna rug pull in the morning," and here we are. Buy them. Yeah, this is a good buy. I mean, it gave a pretty much. I'm looking at FXI. It gave a pretty much dead even half back in the pre-market, and then bounced right off of that sucker. So I mean, FXI, we're looking for $35 outside of
Yeah,
today.
FXI I'll probably buy later. I run some counter trend models on that.
I used
So I'll probably get into those. I was looking more Bob and Baidu is more intermediate term.
back in the day. I mean, I kind of cut my teeth on trading debit spreads on FXI. I mean, it was just obvious bearishness over and over again when this whole thing was breaking down. But now we're right back to the reversion target and rejected, pulled back. This is where we expect consolidation. So yeah, counter trend is going to be the way to go until this thing gives us some bullish moves. And then you were looking at Baidu and Baba. It's kind of the same chart really as FXI. I like to use FXI as kind of the canary in the coal mine, so to speak, when it comes to China stuff. And same reversion trade made and pull back. Good entries. Do you think they're going to continue throwing money in the fire there, or are they going to?
I mean,
eventually.
I think they will. I mean, I went in and small. I did some I did some asymmetrical stuff where, I mean, if I'm wrong, I break even on it. But I mean, I think they're gonna keep throwing money at this thing. So I mean, I gotta at least try the dip here.
I almost want to say, just kind of look at the chart. This is actually a good candidate for um, something called the collar strategy, where you can hedge your downside, and at worst case you break even or close to it, and in best case you profit from it. So that's probably the poster child for a setup for when you would add one. Is if you were long this trend and you're looking to keep that profit and hedge it, and so today's pullback wouldn't have threatened it because your collar would have been back here. But now, if you got in today, your collar would be right here, about 102 on Baidu. Knowing about where the logical place to place a collar is great. Now that's why I'm gonna lead this into the ask about Goldman Sachs and stuff, because if you know where their collars are, it'll make sense to you when you glance at the chart where you should have one. Same with Baba here. I mean, we're looking at pretty much the same chart. Let me go to the weekly on Baba though. God, let me reset this. This is like way out of hand. There we go. So if they keep pouring cash on the fire, I keep calling it, because I mean, I don't have much faith long term in the Chinese economy being able to sustain stimulus, for that matter, is a little iffy. But if they do, at least for the next quarter or two, I got a reversion target on Baba at 172. Pretty obvious here. Um, Market structure kind of says it's already done its thing, so it could trend up to that from here. We just want to see it consolidate right here around the weekly 200 and give us a range between like 108 and 115, and see if we can hold the line, so to speak, and then give us a primary secondary move and break out and run this reversion. I like the setup on this one a little bit better than Baidu myself. It's just a little cleaner chart.
Yeah.
You running some hedging in that one too, or you just went and took it long on the
No,
equity?
so what did I do? I think in split the difference. That was the one. Yeah, so Baba, what I did is I did a credit spread on KWeb, credit call spread on KWeb, and used the credit to buy Baba calls.
Nice.
So it's got like an 85% correlation with KWeb. So if I'm wrong, then I break even on that trade. And if I'm right, my upside's unlimited. Baidu, I just went out and bought the calls.
Yeah, Baidu is low enough to where you can, you don't have a lot of risk in it, and if it makes the move, you get an outstanding paycheck. That's where you make those 300% returns on options. Very good. Yeah, man after my own heart. That's, I guess, why we're both here. We kind of think alike on that. Being able to take an outlook and counter it with a little bit of hedging, and then being able to use that as a neutral exit rather than a stop loss exit. That's a great idea. And another strategy, like I said, read up on the collar. I wrote an article about the collar too, if you want to Google that out there. All right, so we'll look at J.P. Morgan and Goldman Sachs real quick. J.P. Morgan is notorious for setting up collars, and they'll run it on like SPY or Q. You kind of know where it is. We already know where the halfback is on those, but let's look at what it looks like on them. So like if I was to be a JPM investor, where would I put a collar on this? Well, it certainly has that look where it can reverse here. Some people are going to see that as a triple top. They're going to want to hedge about the extent of where the mean of support is. So we're looking for, if I were to collar this one, it'd be about a 187 or 188 strike, just kind of obviously looking at the chart here for about the mean of pullback. But that's only if I got long on it at the right time. I mean, I'd have to be long here to have a hedge here, and then I would have to sell some covered calls to make sure at least I broke even on overall position. But if you're looking long term, and most of these larger funds will tend to have a lot more patience than your average retail trader, just to say the obvious. These guys are looking way down the road. So, like, if they're going to hedge this with a collar, it's likely going to be with a leap position or better. So that's going to give them plenty of time to look back on it. Looking at the weekly chart on JP Morgan, I could say we're kind of at an area where it's a consolidating crossroads type area right around that 211. And you look at the daily and you just kind of split the mean here. We're right at it. So we've got the reversion done today. It's either going to break and remain bullish back to the previous high, or it's going to pull back some here. I'm going to say neutral on this one. I'm going to wait for this pattern to break. It's got a little consolidating to do before it does. And then some people see.
Oh, go ahead.
Some people see the plain pattern on this. You got a serious quick downtrend. We had that volatility last week or the week before. Kind of looks like the H pattern, but that target's been met, dude. I would wait for this to consolidate and break. What's your go on it?
Yeah, so I could buy it here, and the 50-day is a nice stop. It had an undercut and rally there today. 209.81. Nice tight stop if you wanted to do that. The 10-day at 208.51. I don't think I own. No, I'm not in financials at the moment. Not my favorite thing, but yeah, I could certainly see it, moving up from here if the overall market goes up.
Agreed. I mean, it's in a consolidation point. It's met the reversion on this, so this is about where I'd expect it to consolidate. If it holds support, I agree with you around 208, 210. It could, squeeze out a measured move here and stick a target right around 214.50 or 218, either of the two. So I could go on. I'm going to wait for this consolidation to break myself, probably either today or tomorrow. It looks like we do have some data coming out Thursday, which will probably set this thing off. So maybe get ahead of it. Some people would build a condor on this if it was tight enough, and then ride the winner, sacrifice the loser, so to speak. But I'm going to probably just say look at call spreads if it starts to break this range above 211.50. I would say look for some call spreads inside of 2 weeks or more. Expiration should do it. Just my opinion. And again, look at the daily chart and look about where your key support area is going to be. And there's two of them. This is where the collar would be. So like if they were leveraging options against this is where the collar would be. But if you're looking for pretty much your basic core area, if things go south and this starts to break down, say Thursday some horrible news comes out and these guys get spanked, well, this is support right here at about 204.40. And if it starts to continue down, well, we get a measure down here for support test of like $200. Ouch. I don't see that happening. I think it's more bullish than bearish, but I'd like to wait for this consolidation to break before I go super long term on it for sure. And then short term, yeah, we got potential for a measured move up, but let's hang out in this short term consolidation. Watch that 2-hour chart. It'll give you the clue. And 5-minute chart for the day is going to give you some range trades too. So day traders are going to have fun with this too. I don't know too many people who day trade equity on something like this. They'll day trade options, but it's still got the moves for it. And then Goldman Sachs, kind of probably going to be the same chart, I bet. They tend to track each other.
I don't know. Goldman Sachs is usually a little different than JP Morgan. Same chart.
Similar, but we got the consolidation in different areas.
Yeah, it's closer to the highs than JP Morgan is.
Right. And I've got some old dope on this thing. I got so many damn lines on my chart. It's like as Creed would say, it looks like a '70s coffee table at a party. One of the mirrored ones. Anyway, we got this range, we got this consolidation, beautiful wedge, but again, it's kind of neutral until it breaks, and it's right at a key resistance area. We already had this as a bull target a while back. There it was, so it's right in that mean. Let's see what happens next. Give it a little time to work out. But if things remain bullish and we start to break out of here, I'd only expect about a half move higher on this thing, if I'm being honest. I haven't drawn these in green in a long time, so I know it's been a while since I've traded Goldman Sachs, but I'll continue.
Yeah, same. I mean, the financials are not I mean, I'll short regional banks, but going along the financials is not my favorite trade.
Yeah, I'd rather wait. This consolidation, I mean, if you look in the past, it's done this bull flag fail, half back. It's a repeat process, and it's right at that range. But if it does break out, the bull target's pretty obvious, about 562.50 for a half move is where I'd stake it. Worst case scenario, we fail here and we give half back. We go and find support about 408, 410, somewhere in that neighborhood. Just kind of guesstimating. So it's not the best setup for trading. I would wait for this range to break and give us a clue. But for investors, same thing. Long term, I just wait and see what happens with this pattern, because if it gives you a better opportunity to get in cheaper, why not? Be patient. And in the meantime, if you got the clout to sell covered puts on this thing, I would probably look at the 405 strike. Just being honest, and it would be probably 45 DT or better. Good ones to look at though, because paying attention to these is important, and it's already made most of the bull moves. I mean, you can go and compare a few others, except for BA or BAC. Sorry, Bank of America.
Yeah.
Yeah,
big difference between BA and BAC.
Yeah. Don't trade BA right now. Just wait.
Yeah, all these banks look the same.
Yeah. Same kind of difference. This was the more recent one I looked at. It was a nice 1-for-1 measure move. That's done. It's given half back and then some. I wait. It's not the best sector to trade on right now. One that I will be watching for volatility though, especially with all the tension in the world again, Zim. Guys, this thing is pretty volatile, but the price action's pretty nice. We got the 1.5.
I like it here. I mean, my favorite thing is an undercut and rally, and you got it at the 50 today.
Yes, sir. And it came right back to that support area. If it holds here, short-term half back is about $22 target. Long-term for the eventual outplay of this thing, $28 is still on the board. I've talked about this thing probably 2 quarters ago and pointed that out. And I have that orange line here is where I'd see a key area there. That's just for this guy here, the reversion trade, but it's an upper end reversion. Kind of lines up the same. And this is one of those things where if things start to work out, these guys are going to take money hand over fist delivering stuff across the pond. So it's all coming from that region anyway. Let the wars happen and let the volatility fly, because this thing's a great trading stock and it's cheap. So you can trade equity on this and just scalp the crap out of it. Plenty of liquidity. I think I'm going to add this to my watch list, as a matter of fact. I'm going to put it in there right now. Another thing, we're going to go and give a quick look back on stuff we called out last week that is starting to shape up a little better too. Add Zim real quick. All right. So last week we called out, you had a couple of dolls. We had, what was it, YPF?
Oh, yeah, I went back into the Argentine names.
Yeah, this thing was pretty much set for finishing up the last wave of that wedge there. It pulled back into support, and I think we probably want to see this thing hold range here around 21.5. If today,
we do. 2182 is the 50 day.
If today closes a hammer and the body goes right up in that range, we got a pretty good shot of follow through on this thing. Let me go turn on my 50-day. I turned it off earlier. It was too busy on my short-term charts. Mm-hmm. Yeah, that's what he's talking about. Close a hammer above that 50-day today. We get the nice undercut and rally, and then we'll get a cross back up through the regression line on the wedge here. If that all follows through, we've got some pretty bullish moves coming out of this thing soon. I do like
my other Argentine name actually looks pretty good today. SUPV.
SUPV.
Yeah, Grupo Super something or other.
Híjole. Me habla muy poquito español, no mucho. That's probably Portuguese anyway. I'm kidding. I don't know nothing.
Yeah, no habla.
No habla. Market structure looks perfect on it. We've got just a crushing consolidation range. First, second, consolidate and trend. Yeah, let's look for some reasonable liquidity right in here. Bing. We've hit that twice. let's test it again. That's starting to look strong. Reversion targets right in here. Give it the in between. 15, 16 bucks. I like it. Short term, I'm on the monthly chart here, but you know, that primary is pretty obvious. Secondary takes us right to the previous resistance, 12 bucks. Yeah, this thing looks beautiful for long term. Give it a minute to break this this resistance area here, and if it's giving us half of this back, it holds support here. It's got that nice undercut and rally look to it on the daily. Let's wait and see what closes today. Get a close above the 50 period, and tomorrow should set up for continuation. We could at least go and trade the liquidity zone from about 775 to about 850, and then a breakout would be above that. Good eye, man. I never even looked at this sector, but it works good.
Yeah, no, I Argentina is a theme I really like. I wrote them up and they looked like they were getting toppy, so I got out of everything. And now I'm looking for spots to get back in. I think, you know, that is the only emerging market country that is trying at least to be fiscally responsible and free market. Whether they'll succeed or not, who knows? But I like it.
I have a friend who lives in Argentina, come to think of it. And he's actually coming out and being a little more happy than he was in recent times. As we've seen some
Yeah.
turmoil happen over there. Might be getting back into mountain biking. Another one you looked at last week, SMR, man. Freaking gorgeous.
Yeah, the nuclears are taking it on the chin today, but you know, there was just another article out yesterday. Now Google is looking at nuclear.
Didn't
I
they,
mean, this is going to be huge.
didn't they buy a power plant or something? I think the rumor was.
So
Yeah.
Microsoft was talking
That's
about
it,
3
Microsoft.
Mile Island with CEG.
Yeah,
That was the day CEG spiked 24%.
I remember.
Then somebody else, it's escaping me at the moment, came out and said, yeah, we got a deal. And then Google the other day said, yeah, we're looking at it too.
Smart.
I mean, all my nuclears are getting their butt kicked today, which is why I'm down. But long
Well,
term,
I mean,
I love this.
if you get hype like that, I mean, you get, you know, some conglomerate companies going and talking about buying nuclear, and yeah, of course you're going to have a hype wave. People are going to chase that. The old adage of you know, buy the rumor, sell the news, kind of takes effect there. But I don't think it's going to sell down too much more. I think we're going to probably hold it right around here, consolidate a little bit, and then probably trend on higher. The setup is still
Yeah,
looking
no, I
good.
mean, yeah, these are going to be volatile. I mean, NNE is another one we've been on. I mean, it's down 11.7% today. I'm still up, and they have no options. I'm up 90% on the commons in like a month.
Don't complain, man. No one will listen.
No, I mean, not at all.
And it came right back, you know, right back down to that that measured move base. I mean, to the damn number. Look at that. That wick is beautiful. And I think we bounced back for a mean reversion on that to about 1780 in the next couple of days, and then maybe we continue on to finish our moves. But yeah, this is one we mapped out beautifully. I even put my analyst mark on it. There's my purple line. Biome broke out above it even. But that was my target. Money made. Next moves. Let's see if this thing gives us some consolidation in this range, and see if we get some follow through to break that record, or that beautiful call out, I might add. We break that mean reversion. This thing's got potential to just rip faces off. I mean, I don't think this is even finished any kind of market structure other than short term. Here we got first consolidation, squeeze, second trend. If it breaks this thing can absolutely put this on for, you know, years to come and just absolutely rip to the upside. Can it come back and consolidate in this range? And it can. But just be mindful of where your key support is. So if it breaks down below 1550, you got problems. It'll probably send it down to like the daily 50 period or so, and then maybe consolidate it again. But in the meantime, dude, it's a good name. I wish it had options. I would totally wheel this.
Me too.
One I mentioned last week kind of lost a little momentum, but it's hanging there. Light Bridge. I was looking at this liquidity zone, and it
What's
kind of
that symbol again?
LTPR. It's one that I'm going to continue watching because it's got that potential to take a little bit of hold in this this whole nuclear craze. And I'm going to kind of mark out a key pivot area right in here, around $2.88 or so. If this thing gives us some consolidation and holds this range, and then eventually builds a trend that breaks this LZ here, it's going to probably just go for it. Reversion target is right there at about 420. It's a pretty easy trade. Can it go higher and hit the 480s? Sure. Check out the monthly though. This thing has been around and it's been through a few splits. If you look back, I'm sure you'll find a couple. There's one.
Did I give you ASPI, ASPI?
I didn't see that one yet.
Okay. I mean, that's another like way below the radar screen one on this nuclear play. I mean, it's, you know, it's moved from 2 to 293, which is a pretty big move for a $2 stock.
No kidding.
But it looks like it's still got some play here. No options, but it's a $3 stock, so it's kind of like having options anyway.
I've sometimes found some stocks in this range with weekly options that actually do well for wheel trading if you want to practice it, but careful with those. They don't have a lot of liquidity.
Yeah, I don't think this one. Yeah, no options at all in this one.
But it's got a pretty nice little reversion target here around 370 or so. And it's trending. We got a primary and accumulation. Let me look at the 2 hour. Where are we at? Aha, primary. Out there. Let's split this up. Bear with my drawing. I draw so many boxes in a day. It's not even funny. They work, and they're great at finding price targets. Can't knock it if it works, man.
No, you can't.
Reset chart to center that and go back to the daily. Aha, close to our reversion target. So if we hold support here, look for support around 280-ish, 285-ish. And if we hold there and start to break back above the 1/2 for one measured move around 320, look for a breakout to take us to about 360 or so. And then reversion targets right up here. If it extends to 378, I'm going to probably take profit there if I'm trading it. I'll keep an eye on this thing. This will be in my penny stock watch list, I'm sure, by Tuesday next week, just so you know. I'm going to keep an eye on this one. ASPI, let me put that in the watch list right now. And some more follow-up. ILMN. We didn't talk about that one yet, but it sat right in that liquidity zone, right where we knew it would be. And follow through is looking imminent on this thing. If we can break out of this range, we got a pretty good shot at following through with that measured move. So don't give up on this one yet. But if you've got to take some profit here and you got long last week like we were looking at, some profit taking's already taken shape in this range, so just be a little nimble here. If it breaks down below that too far and gives more than back to 135.80-ish, you might consider waiting for that to consolidate and finish the move or give a half back. So again, this area we knew was critical and it hasn't broken it yet. So, you know, give it some patience to see if this setup continues to follow through and follow up to our ultimate pull target. But these things can fail, and usually around half a move is where they're going to consolidate if they're going to fail and pull back. So be nimble here. We did good calling this one out. We found some short-term price targets on it. The long terms are still in play, but definitely, you know, pay attention to this liquidity zone. It's going to probably make some moves here. Today so far, it seems to be continuing bullish, and this is a rising wedge to boot. So when you start to see this volatility do this, they have a pretty high probability of giving about half that trend back. So short term, look for possible 138 pullback again today after this high. So if it gets shorted, that's where the bullet bears are looking. If it holds support in that range, consolidates, breaks through this zone, yeah, follow through is imminent. But it's a nice stock to trade. I'm loving this one. It's been doing me some good. Another one you pulled up yesterday or last week, FLR. That thing is, or did we just talk about that? No, that was last week.
Yeah, FLR.
Um,
It's another AI kind of infrastructure play.
can I say nailed it? That
Yeah,
measured move was
I mean
perfect.
that's my favorite chart pattern: undercut and rally. Bought it when it dipped its little head above the 50-day, and so far so good.
That's the ultimate kudos right there, man. This is why we have a maintained 94% accuracy rating on our call outs, guys. Stuff like this. We do good with it. Can it go a little higher? Maybe, but let's wait and see what happens with this resistance area around 51.5 bucks. But
Yeah, it's got 51.64 is the high from July.
and it's got plenty of previous price action to start playing in range bars, and those kind of stripe out across these half measured move ranges. But if things get really interesting, 57 is about the mean reversion target here. So again, if you're still long in this thing, stay nimble here, be ready to take some profit, but definitely give yourself a pat on the back for making a killer bull trade because you did good. Now we're looking for maybe it'll continue higher, maybe hedge your position a little bit if you've got it still, or take some profit off so you can maintain at least you can't lose situation. I used to do that all the time when I'd compound stuff as my cost basis, so it'd be low enough to where I'd sell off enough percentage of my position to cover. If the thing went broke overnight, I'd still make money. That's my goal in life. So if you're trading a lot of equity on this thing, then that's kind of the go-to strategy on it. But if you're able to take some profit off, I mean, it's kind of giving you the sign of you should take some here at least, and then wait for this to follow through or reject. So it'll give you a sign pretty quick here. I think in the next couple of days we're going to see what happens with this. But so far, target met. We did our trade on it. We're good. I think that's about it. Let me see if there's any more comments here. URA is an interesting nuke ETF. Is it now?
Yeah.
Let's have a look.
Uranium.
And thanks for the feedback, guys. We love talking. And we like to hear ourselves talk sometimes. But, we got some good things to talk about. So, stick around with us. Bear with us. That was a nice cup and handle not too long ago. Broke. Gave us the measured move. If you take this as the primary. So the weekly chart looks like we should be consolidating around here. Let me go to the 4-hour on this one. There we go. That's a good name for nuclear stuff. Is this one?
Yeah, I mean it's mostly uranium,
right.
but which is totally fine. I mean, I've been watching CCJ, which is a uranium company, waiting for a dip. I mean, today it's down 25 basis points when all the nukes are getting their butt kicked. That's not. I mean, I'd like to see it come back to the 200-day, and I'd snap it up like crazy. But same type of deal. I prefer to pick your own names because a lot of these ETFs,
Yeah.
the way that they're structured suck, but it's way easier to just buy the ETF or buy options. I know Euro's got options.
Well, for sure. And then what we like to do is, when we always talk about it, ETFs in Bullishbrs membership chats, is we always say pick the ETF apart, see what their top 10 holdings are, and
Yeah.
you're probably going to have better trades on those than you would trying to trade
Another
ETF.
one is Nukes, NUKZ. Very concentrated on the top 10% CCJ and 10% Constellation.
Holy smokes. This thing needs more volume, but
And
the setup's
probably
good.
pretty correlated, but probably not exact.
I'll throw my HA candles in there so I can see about where we're going here. Consolidate. Let's hit that support. If it can break 40 bucks, it's got a good shot at 45. Yeah, give it some time though.
Actually, you know what? Interesting.
I had to go to HA candles to see the price action on it. Really low volume, but it's
Okay. Yeah, there's 72% correlation so far this year. So couldn't hurt to own both of them.
and if it pays a dividend, even better. I don't think it does though.
I doubt it.
Yeah, it doesn't. Worst
I
case
think we
scenario.
have to. I don't know if Nukes has options.
No, I didn't see it either.
No.
Does have a nice clean reversion target though. So if things remain bearish here and you're looking for a pullback in this thing to go long on, $35 is key support. It's right in the middle of that trend. I don't think it's going to break down that low though. I think it's going to probably sit around $38 for a little while first. So let me kind of switch back to regular candles for a moment here. There it is. A little lower than I thought. I always look for these wicks of support, especially if they're running off the 8 or as you would use the 10 period. That's kind of a cheating way to look for liquidity zones, but that's where their buyers were on this thing when they saw it bounce. So when you start to see this as a liquidity zone, it's kind of a likely return target if things fail here. So if things break down here, this is your pullback target, is about 37.5 or so. And if it holds there and continues higher, then you take this as your primary move, and then you get a breakout move to about $45 or so is where we're looking. And then the reversion target, if things fail this zone, well, you can get a bearish trade on this thing, short it down to like $35, and then pick up the change and run some longs. I like the setup for long term on this thing. It's not the volume that I usually would trade, but it's got a pretty clean chart more or less. One last look I wanted to do, if I got a minute. Where'd that thing go? There it is. NVO. We kind of talked about this quite a bit, and then someone asked me if I would take another look at it, and of course it kind of failed that liquidity hold, and this is what I'm talking about when you start to see these zones. They stand out to you. And we're looking for a possible pullback even further, and today and yesterday it kind of came up and rejected that zone again. I almost want to say it's likely to consolidate here and maybe give us a bullish trade later, but it's kind of in a dangerous area if it continues to break that.
I would watch 118.35 if it can break above 118.35. And I own it, but that would be a spot I'd be looking to buy more.
Agreed. And that's where I'm like, well, it's rejected it here, but it can't consolidate. If it holds this range and kind of keeps into this key area, we could see this thing finish up and start to trend back up here. Short-term reversion's obvious here around 126 or so. But I mean, it pretty much did everything we were expecting to do over the last couple of weeks, and now we're just kind of I'm in a holding pattern. I'm not taking a position yet, but if it does break that and start to trend, I might take a position on it. But yeah, it's been one of those good call outs. And again, it's not the best chart for me, but I like it if it does break that zone. And then last but not least, were we looking at APO? I don't remember if we looked at that or if that was another.
I don't. Someone else brought that to my attention.
Well, last week.
Oh, you know what? We may have talked about this because someone brought it to my attention. I mean, you've got the latest kind of hot thing in ETFs is private equity deals,
Right.
Which I might actually get involved with. We'll see. And I got an ETF that's going to own some SpaceX and some other things that I may get involved in. We'll see how that goes.
This is I think this is one that I looked at by there was a user who requested that I check this out for him, and I did like a special edition and looked through 4 tickers for the guy. It's kind of played exactly where we thought it would, and we just broke above that half a measured move here, and the extension is right up here to 143.20. It's looking pretty damn bullish, so I think we could see this continue higher. And it printed the high wave here and kept on crushing it today, so good shot of remaining bullish. Again, thank you for bringing that to our attention, because that was a good one. And it might have been kind of us talking about it after the fact, and then we started spitballing on it and did very well with it. That's the kind of thing that we love to do. So like we say, if you guys have, even after the show goes off, if you want to shoot a comment to our YouTube channel, I always respond to those. And if you want to throw us even a list of tickers, happy to look at them. If I got to do a special edition or do a whole show on it, I don't care. It's stuff that we love to do. We love to help, and that's why we're here. So if you got something you're interested in and you want to put it out there, feel free. We take requests, we take call-ins, and as I'll say, don't call Kramer, call us. So I think that's pretty much it until Thursday. I think we're waiting on some data and some volatility, of course, and then I think you're going to take a trip on Thursday somewhere. So
I am golfing on Thursday at some secluded golf course in Georgia. So yeah.
Nice. I think there's quite a few nice golf courses down there. They got the best environment for it. My father-in-law lives down there, and yeah, he doesn't golf, but he knows a lot of guys who do, and there's some beautiful areas down there to golf in. I'll just say that. At one point, I considered buying a house down there, but I'll wait till the market falls apart first. But yeah, it's gonna be probably just me on Thursday, and then I'll do something a little less involved. I'm gonna go give it like kind of a rapid fire approach on Thursday, unless we got some really great news that comes out of that data. I don't know that we're gonna see much until Thursday anyway, so we'll hang into it. But definitely be nimble in this market, and I would say it might even be wise to be somewhat flat or neutral by Thursday and then wait for the data to play out and give us the follow through on it. I'll look back at QQQ before we go. This choppy nastiness is going to eventually break, and I think Thursday it'll give us the clue we need to follow through, whether we continue bullish or we break back bearish. I day trade the crap out of futures, and I use QQQ to map my NQ trades. It's different than anybody else does, but I lay a lot of dope on this because I can draw on it easier. For now, we're looking for consolidation for the rest of the day in this range. We had a target here at 487, and then we had a secondary target at 48 and some change into this next liquidity zone. Watch that zone. If that breaks bullish today and starts to trend into Thursday, cool, trade it, because you got a nice primary behind it. But if it rejects here, look for the halfback and wait for opportunity. So either take a quick overnight bearish move on some debit spreads or whatever you got to do. But watch this range. If this range breaks, it'll give you a pretty good call out today to trade an overnight. And then tomorrow, again, I'd play kind of neutral-ish tomorrow unless it's a trend day. And then wait for the data on Thursday to really give you a clue on where to go for the remainder of the week. And of course, next week is going to be exciting too. So again, thanks again, guys. Have a wonderful day, and don't be shy. Feel free to reach out to us anytime. We're happy to talk back, and we enjoy the company and being able to talk to people and help above all. We do appreciate the likes and subscribes, but above all, tell your friends, because the more people we can help, the better we're going to feel about ourselves. So thanks again, everybody. Have a wonderful weekend. Be safe. For those of you down in Florida, button down the hatches and
oh yeah,
be careful. That storm's
definitely
pretty wicked. We got a few friends down there ourselves. I know Big Beat from Quasar's down there and kind of hunkering down. And I've got friends in Sarasota. I've got friends in Tampa. I've a lot of friends down there that I'm going to be checking on. And again, just be careful, be smart about things, and if you're going to be asked to evacuate, please do, because I mean that stuff gets pretty wicked down there. I wouldn't want to be caught in 180-mile-an-hour winds. I'm not afraid of the wind. I'm afraid of what's in it. So big metal things usually fly pretty fast in that stuff. So be careful. Thanks again, guys. Have a wonderful week. We'll see you around.